and as we just discussed, China's central bank governor has announced that monetary policies to cool home prices in China will continue or even strengthen in the future. This as property prices in China's major cities saw the 9th consecutive monthly increase in February, and as China's inflation rate hit a 10-month high in February. And joining us to discuss this is Mamta Badkar, a financial journalist for the Business Insider, and Daniel Alpert, managing partner at Westwood Capital. Thanks for joining us both this evening.
Thank you.
Daniel, we'll start with you. Let's focus on today's announcement by the central bank governor saying that he's going to be implementing structural monetary policies. What does this really mean?
Well, you know, China has gone through these periods of expansion and contraction. They've flooded the markets with capital, then they've pulled back as inflation has gotten higher. And this is the same thing that's going to continue on, dependent to a large extent on what's going on in the rest of the world, because the heat that falls upon the Chinese economy is really a factor of what is going on globally, given the fact that it's an enormous export economy. So you're looking at a situation which we've seen before, right? Mm-hmm. People tighten up, they try to keep the property asset bubbles and price bubbles under control. And this is just the latest occurrence of it.
Why would it be so bad if there is a housing bubble? What are the ramifications of this?
Well, bubbles, of course, are very, very difficult because in housing in particular, there is debt. People borrow to buy houses. A lot of purchases in China are cash, but people still borrow to buy houses. More importantly, builders borrow to build buildings, right? And in order to be able to pay off the debt that they borrow in order to construct the buildings, they have to sell the apartments. And one of the difficulties is that you can end up with a lot of bad debt, as we did in the United States and elsewhere, in a property bubble. So,
Mamta, what's the worst case scenario here if they don't manage to cool down this housing crisis? What we saw in the U.S. in 2008?
We don't think it'll be that bad because in China they require you to make bigger down payments. So it's not necessarily the same thing. China's got a huge urbanization is being looked at as the key driver of growth going ahead. The urbanization rate, I believe, is supposed to go up to 65% in the next 10 years. So that we don't think it'll be quite the same, but we definitely are seeing, you know, property bubbles in certain parts of China. We wouldn't characterize the entire housing market as being a bubble.
What do you think the government should be doing that it isn't, or what do you think it is doing correctly?
Look, all of this ties into the issue of absorption. You have, last year in 2012, you passed the halfway point. Chinese population is about half urbanized and half rural, and the rural portion is very poor. You have more people urbanizing every year. That creates demand for housing, right? And so what you're seeing is bubbling at certain segments of the market. I particularly look at the top 20 or so % of the market, very high-end market. You're seeing properties go crazy in those areas.
What about the capital gains tax that the government has said it's going to impose but hasn't given an exact date on with regards to people who are selling their houses? A lot of them are rushing to sell them so that they don't have to be subjected to that tax. What is that doing?
I mean, we've seen reports about how divorce rates in China have spiked because people are trying to get around it.
Right.
You know, they'll go back, they'll sell the first, because I think they're only allowed to, the loophole is that you can sell the first home, your primary residence, tax-free. So, you know, people are rushing out to do that before it hits, but we don't necessarily know that these curbs are necessarily working. The things that analysts that I talk to have said they want to see is more housing affordability. They want to see the income inequality go away. They want to see more migrant workers get residency permits in big cities so they can move in, they can afford to buy homes there.
Now, China is dancing a very delicate dance between maintaining its growth, which it said it wants to keep at 7.5%, and keeping inflation low, which it said it doesn't want any higher than 3.5%. February, it was up to 3.2%. Daniel, what's the best way that the government can do this?
Well, the problem is that you are in a very, very fast-growing economy, and it's very, very difficult. And in fact, you should have a fairly high rate of inflation in that kind of growth scenario. So if you really want to look at where China gets into trouble, it gets into trouble a good deal higher than 3.5% inflation. There's sufficient growth in the
So at 3.5, nothing to worry about yet?
No, not in my opinion.
Mamta?
So one of the things that people are concerned about, though, is that inflation was driven by food prices, which makes up a bigger part of the CPI basket. And that's definitely something China's always concerned about. So what we're seeing right now, Reuters had this really great piece out which said, while the central bank wants to watch inflation, the NDRC wants to push economic growth.
Right.
So the central bank kind of feels like it has its hands tied.
Absolutely right. As you've said, there has been a bit of a controversy, a tension between the People's Bank of China and the National Development and Reform Commission, or the NDRC, as you said. Unfortunately, that's all we have time for, but thank you so much, Mamta Badkar, financial journalist for Business Insider, and Daniel Alpert, managing partner at Westwood Capital.